down 91%. God damn! I still keep this stock in my portfolio, and every time I open up my investment account, it's just like a reminder of all the mistakes I made in investing. Like, why not sell it though? Like, it's only worth like 50 bucks, it's not gonna change a damn thing for me. I kind of already accepted my loss. So here's what happened. Before we start, please remember to subscribe and turn on notifications for my channel. I upload videos on financial tips and financial comedy in my shorts. So if you want to get some financial tips about finance or get a good laugh, your support via a subscribe is always appreciated. Now that we got that out of the way, let's continue. So I bought this stock back in March of 2019 because, well, at the time, the food delivery service was just beginning to take shape, and I thought that, well, this could be the next big thing. The only company that I knew that was in the meal kit industry was Good Food. So I bought it. The stock was a little bit over $3 a share at the time. Then 2020, COVID hit, panic set in, and by March of 2020, all stocks dropped. Of course, that hit Good Food as well. The stock went all the way down to less than $2, and when the stock went back up to $3 a couple weeks later, I immediately sold it, just being happy that I broke even. And the stock just kept going up, and at the peak, it was up to $13. And then the initial hype cooled down, and then by the time it got to $5, I immediately cashed in and invested 600 bucks. At the time, it wasn't even a big part of my portfolio, but I thought that buying the stock at $5, that was once $13 at the high point, was a bargain. And that was my first mistake. And I thought that a company with so much potential in the market, you know, food delivery, had to be making money. That was mistake number 2. I didn't do any research. So let's go over everything that I did wrong, and hopefully you don't make the same mistakes as me. The first and probably the biggest mistake I made during this transaction was buying a stock that seemed like a bargain based on the peak price. I bought it at $5 and saw $13 at the peak, and I thought that I had to get there at some point. I mean, it still might in the future, but let's say you go to a store and everything is 50% off. But if the quality of the product is really bad, is it really a bargain? Probably not. Not everything in the stock market is a bargain unless proper financial research has been done. A lot of times, external factors can temporarily affect the price of the stock. For example, hype. The truth is, most startups don't turn a profit for the first couple years in business. Good Food was one of them. This is because most startups in the beginning invest a lot of capital on infrastructure. Even when they have a lot of business, they're still losing money. And Good Food was losing money every quarter, even during COVID. In fact, the second quarter of 2023 is the first quarter in history that they turned a profit, 9 years after their founding. So at the time, was $5 a share a bargain? Now we know that it wasn't. And not doing proper research and financial analysis at the time really bit me. And this ties to my second mistake. I didn't do research, I only went with intuition. Essentially, I was gambling. I didn't do research on the market size, what markets they were competing against. I didn't even fully understand all the products they were offering. I literally just winged it. Doing research, especially with startups before investing in them, is extremely important. Now, if you're talking about companies like McDonald's, Google, or Apple, you probably don't need to do as much research. But for newer companies, absolutely. After doing research and digging deeper, I realized that Good Food wasn't turning a profit ever since they launched the product. They were investing a lot of money into infrastructure, trying to prepare for the future growth. But the shareholders didn't like it. That's what tanked the price to become a penny stock. Shareholders would much rather have a smaller but profitable business. That's why layoffs in tech is happening all the time. It's literally all to appease the shareholders. I also didn't do research on Good Food's market share in the meal kit delivery industry. Also, what's the market size of the meal kit delivery industry? And I still don't know the answers to those questions. So in conclusion, the two biggest mistakes that I learned was, and hopefully you don't make the same mistakes, stocks are only a bargain if you've done thorough company and financial analysis. And just because a company used to be trading at $13 and now is at $5 does not mean it's a good buy. Number 2, always do research on the companies you're investing in, especially if it's a startup. We're talking about market size, we're talking about financial reportings, who their competitors are, what products they're offering. Did this video help you out? If so, please remember to subscribe and turn on notifications for future videos regarding financial tips in my long form content and financial comedy in my shorts.